All right, guys. Welcome back. Crazy little day here on Friday. Hope everybody had a great Thanksgiving, friends and family. I'm just doing a wrap up of today's trading. It was pretty light, not a lot of people on our team around, and then, but we did have month end, so I guess I'll hit on some global macro in the major futures markets that we trade, and then also I'm going to hit on crypto because I really like where BTC has kind of bottomed with these major long-term cycles we've been talking about for a while. And yeah, I really like this trade. So I'm going to walk through that. And yeah, so it was just an overall kind of one of those holiday trading sessions that, I mean, we saw energy just go straight down in the straight line all morning. So that was pretty tough. I'm going to walk through how we kind of played that. And there was a lot going on there. Let's see. So, I mean, at one point, oil was down 5%, nat gas it's down even more, 7% straight line, 7-8% today. It's crazy. So actually, we're playing a core long here, guys, and I'm gonna kind of wait and see what happens. Technically, we might make a higher low here, even if you fall back to 220. Um, I want to try to work a core long. I still want to be in energy, probably the next quarter or two, at least in the first part of the year. I've kind of gone over the reasons why. I mean, energy, when you have a little bit of a reflationary trade, which we've had inflation kind of pick back up, just coming off the base effects of where we were last year, and this kind of a cyclical phenomenon. But when you still have growth slowing, but inflation pick back up, energy is kind of a good place to be. Plus, you coming into the winter, so I don't know. I think there's a lot of positioning here. Obviously, it's a holiday. Probably pretty thin markets, so I think energy got pushed around a little bit today. Um, Oh, but that's it, guys. It's Black Friday. I put together a sale. I thought about it this week, and um, if you guys, so there's a lot of you that have interest in the prop program. I went and discounted the courses um, leading into today already. So you can, if you just want to learn the model, or you're just getting into forex, or you're curious about our pi cycles and some of our cyclical concepts, I knocked down all the prices on our courses. This is our institutional model, and then this is my options course. It's both the option strategies we use in addition to the institutional and directional model, which is our full 9-hour institutionally forged process. And then there's a comprehensive package. So I knocked that down by 56%, guys. That's a great offer. But even better, if you want to get involved with us on the prop program, go ahead and go to jenkinscm.com, click here. And I've done some webinars, guys. There's some recordings. I guess I'll include in the links on this YouTube video that you can go back and look at if you want some details on the program. But I know some of you have you sat through those meetings, and this is a great opportunity for you guys to just invest in yourself, make a commitment. You're going to save yourself $1,000. I'm going to run this through Monday. So you guys that are on the fence, I would just take advantage of this. I mean, it's already a great value to have my time and access to capital and trade for an entire year. And then, I mean, just to save you an extra $1,000, guys, it's kind of a no-brainer if this is what you want to do. So I made that available, and yeah, that's that. Let's get into it. So I came in this morning and just wasn't really thinking I was going to trade equities that much unless we got kind of a pullback. Oil had my attention first, so I'll come back to oil in a second. But as soon as we opened, I actually started a long on oil at the start of the day because it was down a decent amount in a straight line. I was like, all right, we'll take a little bit of a contrarian long. So started out long the mini contracts, and I'll show you. And then what I ended up doing is trying to get long the full contracts, but then just realized, you know what, the minis that I started buying first were going against me, and I didn't want to give too much back, so I flipped and scalped the short side of that to get some of those losses back on this. But the reason we went long here was just because you're down for 30-minute cycles. Four 30-minute bars in a row. 15-minute was down a decent amount. There was a little bit of support here. Technically, once that broke, it put you back into the middle of the range, and their second support was down at 56.80. I think it was 56.60. So I was just working over a bounce. I mean, sometimes when you have these holiday shorted trading sessions, it will just get crushed in one direction, and you don't get a lot of the flows to keep the ebb and flow with it, retracements or bounces to trade around. So I think that was a lot to do with what was going on today. I mean, some headlines. It's a little bit easier to manipulate the market if you want to start throwing that stuff around, but it's so hard to figure out why the markets are doing what they're doing. You just know that you can get on a one-way street like this in these shortened sessions, and that's what you had in oil. So I'll come back to that one, but then the Russell didn't really have much on the cycle. But my game plan was short the Russell and then get a chance to buy S&Ps or the NASDAQ. And so I was going to let the market come to me. I ended up buying S&Ps first on the open. Let's see, where are we? So 9:30. So we started this pullback here. And then what I saw on the Russell was it started to come off with this candle right here. It's called a real money candle in our model. So I went short with that power. And then we had, at some point, we had a little bit of a bounce that I sold another lot. Sold into it, added, covered the low pretty well, and actually flipped and went long just as a scalp because we got back to the 200 on the 30-minute. So there was a pretty good edge there for maybe a little bit of a bounce, and that's what you got. It came out of that. And then what I waited for was the 15-minute cycle to come back high, which you can see it's ended up cycling back up into about 10:30. 10:30 can tend to be a reversal time I teach my guys. All right, so then I leaned a little bit short there and then caught some of this move down. And at the same time, while we were pulling back here, I started working on a little bit of a long S&Ps. That had a bounce. I sold into the highs there. And again, I didn't really stay with that one on the long side just because of the cycle. And it's a shortened session, so I'm not planning on trading the whole day. And I had some money in it, just booked that. And I kind of had my hands full on oil. So, and then we also traded, just scalped around the NASDAQ a little bit. It was kind of the same thing. I didn't trade the first pullback here on the open, so this was the first pullback. And then you had a pretty solid bounce. I mean, you had a good bounce back here on the Russell, the high beta stuff. NASDAQ had a good move back up too, but I missed this. But after this wall, I played this pullback, and then I just came out of it. It was a kind of a quick scalp. So I had this wall in place. I played this pullback. It wasn't really with the cycle, so I didn't stay with it very long. I was just kind of in and out, and that's all I was kind of going for today. And then here on oil, it's just, I mean, I can't believe how much it fell off in the end of the day. I kind of cut my longs on QM, which is the minis, by the time we were here and here. I didn't like being below this low. So kind of what we did is scaled in here. Thought maybe we had a shot on this bounce. I bought full contract, and I missed selling right there. But then I ended up getting short against it a couple times. And you could see with this QM just couldn't bounce. And by the time that's the problem with buying lower lows, is you can get a bounce and then it's back to new lows. So I stopped on that one. Here's some of the executions. Well, that's me on the long side and then short. Here's those S&Ps right off the open. Nibbled, came out into the highs up there in front of 3150. There was that little quick NASDAQ play after the 1030 dip. That's kind of what P&L looked like. QM. Stop that. Let's save that. Oh, there we go. So that was me nibbling and then just puking on that lower low. So that was the part of that. Here's the Russell. So this was the Russell. I was short, added, covered into the low well, went long, came out of the long, waited for the 15-minute cycle, faded that a little bit, and then came out on new lows. This was some pie line action right here also. All right, so it was like $700-800 day trade there. Ended up even being on a tough day, being long oil, just managed to kind of flip around. Did pretty well on the Russell there. So overall, choppy day. On the core position side, a little bit longer term. This is why I just encourage you guys to join. If nothing else, join our Cycle Edge membership. This is where we're swing trading around our core longer term positions. That's how professionals trade. You're not just day trading. You got bigger positions that you work a core position. You trade around the bigger themes. And I like our I'll talk about Bitcoin now. So I like our BTC position. That's up nicely. We were buying pie the other day. This is what's possible, guys. You can start to have these types of days. I mean, I have a decent sized position here, short the Russell, that was able to cover a little bit more into the close. That was good today. And then ultras kind of came off the long end of treasuries, which I have a short there versus long 30s and I'm long 10s, which I'm kind of like break even at on my core position there. So I've kind of been scalping back on the short side of that ultra position. And the reason being is ultras were kind of high within this intermediate term, what I call risk range. So we're running into this. You're running into this here in ultras. This was the old highs up here in front of 190 handle, lower highs. There's a lot of reasons why you could maybe see the intermediate term in bonds roll over in December. It's certainly possible. We are kind of basing though, so we just could easily, I guess, break out. But what I've been trying to do is pick off some of these, make some sales up here at the top of the range, and then like today, you saw you could covered a little bit on that pullback. So I don't want to be too short there. I'm trying to keep a core long by being long the front end, so long euro dollars and long twos, short fives, short ultras, but long 30s. So it's kind of a butterfly, but there's different durations that I'm playing there. It just depends how you work your stuff. So this is what you guys will learn as part of really on the coaching side and the prop program is I'm teaching you how to trade bonds and treasuries and the yield curve. So we're short fives and long 10s, and you can do that intraday. And I'm teaching you guys how to do it core positions too. I mean, the concepts and the edges and the analysis and the execution is all the same as far as the model goes, but learning to size your portfolio and work your positions over longer time frames and day trade is, that's just, that comes with experience. You got to kind of see that in action. Tough to read that in the book. Let's start with BTC. BTC, I mean, pretty textbook. We broke the bands up here, just shy of 10,000. And then that set us into a deeper pullback. We cycled all the way back to pi. Now from here, a bounce back towards the underside of 9,000. I'll take some of my position off and then add back on the next pullback. But this is what it is really, really nice to see is that we held pi. That was the futures chart. This is a little bit different on this cash chart. But these are the longer term cycles, man, that I've been talking about all year, that come November, December, and into the new year is going to be critical. If we can hold and make a low, there's a really good chance that we have a new upcycle to start the year. And that can run in the entire year. So it's good that the market held pi. The next thing, like I said, the challenge is going to be, can it make a higher high relative to the intermediate term lower highs that we've been kind of stacking on the way down here. So the last bounce here was to a lower high relative to here. So this is going to be the challenge now. And you might make a high here. You might make a high with this turning point. But you may come up challenge like the underside of the 200 here. Probably a lot of people will have. That would actually set in motion another lower high. But then what I'd like to see is like what we call a phase 2 higher low, and then eventually new highs, new higher high relative. So you could have a higher high on this next move, boom, or you could do like I just noted here. You could bounce, take a little bit of a breather, put in a lower high, put in a higher low or a double bottom, and then make the higher high. When you get the higher high, and if it's on this wave, I think you're going to be rallying all the way, at least till this turning point. And what's also encouraging for the bulls is this longer term wave that the market's been in a down cycle since the peak 2 years ago is turning back up. So that's an 8.6 wave. So that tends to be one of the units in a derivative of pi. So the market cycles around that. The global business cycle is 8.6 years. All right, so that's certainly possible coming off this last wave. This was a wave we cycled down, couldn't make a higher high, set in motion the lows. We broke out exactly. I think you guys have seen my other videos. This turning point exactly on this bar. This was a base on the lows, and this was the start of the new uptrend that happened exactly with this turning point. And then you rallied for a full half cycle, and actually even into here, we still managed to stay above those breakout areas. So I think this is setting up really nicely for possible another run into 2020. So we'll keep an eye on that. Obviously, we're going to be adding and reducing along the way. I saw a lot of bears talking about 1,000, 2,000, 3,000, right into the lows, which was typical last time we bought them. All right, so that looks good. And yeah, guys, just I'll probably send some emails out, and hopefully some of you can take advantage of the Black Friday sales. Call it Cyber Monday. Again, go to jenkinscm.com. jenkinscm.com. You got the trading courses, but really, guys, I would just encourage you to do the prop team if that's something you're interested in. You have access to capital, going to help you trade, help you make money. You get to trade alongside me and the team every single day. That's the best place to learn in real time, take risks together, and you get all the coaching that comes with it. We used to do coaching sessions just for 6 to 8 weeks. This is an entire year of coaching basically every single day. And then we do formal coaching sessions also along the way. Yeah, guys, hope everybody had a great Thanksgiving. Have a great week, rest of your Friday and weekend. And hope, if you have any questions, you can join our chat room here. I don't have a webinar scheduled this week. Probably next week, actually, I'll update that. But the chat room here is a great way to come in and connect with us also. You can ask me questions. Throw your email in. I'll check that later today and reach out to you. You got to get the Symphony app, and then you can search for our room. I have instructions on how to do that once you get in there, but that'll put you inside our chat room. Okay, guys, have a great weekend.